Okay, so here we're going to go over Nasdaq. It is Sunday pre-market, so we're doing our weekend pre-market analysis, where we go out to a 4-hour, then down to a 60-minute and 15 to look at one. We draw outer up and down trend lines, and then also we will draw zones off of swing high and swing lows. We try not to draw too many of them, just some important ones or key levels. And then we will also look at market structure, look at the swings, because market structure is basically, if we're making higher highs, higher lows, we're in a bullish market. We only want to trade long with the higher time frames. So we're down on a 10, 5, or 3 taking trades. So if we see market structure as making higher highs, higher lows, well, then we want to be bullish with that market. We only want to be in buys until we see the market structure change or roll over. So you'll see it start to roll over, start to round over, and then you'll look to see lower lows, lower highs, which is a bearish structure building. And then you would look to get out of any long trades, close off your runners if you have runners on, and then look to take shorts. So here we are on the 4-hour. I'll kind of zoom back out. But basically, of course, we all know that ES, NQ, gold, we've been making highs that are all-time highs. So NQ, we're actually coming down off of that. So we actually have a down trend line just like we have on the ES. Okay, so just as we have on S&P, we have here on Nasdaq. So we have a down trend line that we drew actually from this high to this point in here. That was extended on out, and that was respected here. So as we had this big bullish swing back, it actually pulled right through our zone. And then it ended up finding support here, which is our outer uptrend line. And we also had a zone there too. That zone is off of a 4-hour swing, that green zone. So again, we're trying to place odds in our favor. Would it have been good to take a long there? Yes, and we did, because it was bouncing off of a 4-hour trend line as well as a 4-hour zone. On the smaller time frame, it had built structure. It had built higher high, higher low. We got in and was able to take it. So it traded all the way back to this zone, which would have been red at that time, kept going, pulled through the downtrend line. Again, the downtrend line is actually from this high to that wick, but you see it was respected here. So it pulled up through that, pulled back and bounced. So on the 4-hour time frame, 4-hour traders could have taken that long on that green candle, okay, because it had tested that 4-hour downtrend line, and we trade up to our upper zone. This upper zone was drawn off of this high right here, this swing high, big swing up, big swing down. So then later on in the week, it actually broke through. And this was Monday of last week. It broke through the top of that, kind of went more sideways. It tested it, held up, went a little higher high, and then broke back through. And then we saw after that big, huge candle that it just pulled up back up through again. So this zone has really been tested and respected to an extent where you'll see the swing under here. It swing and nailed it there, then it blew through. Couple taps and then blew through. Here, blew through. Okay, then that really didn't hold up. It popped through, tested the backside. So I'm going to leave that on my chart. That is going to become a yellow or mid zone, because as we're down on a lower time frame, we need to know why and where possible bounces may be. Okay, I'm going to change this to a buy zone or green. And then what we're going to do is we already have a zone up here that's gray. So what I want to do though is I'm going to draw another yellow. And I'll show you here in a minute why. Because we're at this price level. So I'm going to come back here and I look at this high and the basically that wick of that candle, and I see that it pulled up to that, tapped it, pulled back down. So those are the 3 zones as I want them. If you want to draw another mid zone in there, you can definitely come down to like this swing low here. I would pick one or the other. I would not use this one because it's too close to our other green zone. You might as well use that. So if I was going to draw another mid zone, I would look to this wick right here and draw one on that. What I like doing instead is coming by, and I would rather be aware of this level, which I already actually have, that it had pulled through, and then I'm going to call that a target or support resistance zone. So you can definitely draw them in here like this and come in and label those as support and resistance lines. This was a target we were using, and then you would want to change it to just say support and resistance. I know that my support and resistance lines are my targets, but if you don't, if you need to label them target, okay? So that's what we're looking at on the 4. I'm not going to draw a downtrend line because it's bullish. So if we look at our downtrend line again is from up here to there. It was respected here. It broke that downtrend line. That was broken, and it is making higher highs and higher lows until it breaks this one, this dash line here. That's a trend line. Until it breaks that and forms a lower low on the 4-hour time frame, I am not going to move this downtrend line because that's going to give me some false signals. Okay? If I take this trend line and move it out off of that swing, what I did was just create an obstacle as it pulls up. And it's like trying to throw a brick wall in there and say that's going to hold up. It's making higher highs and higher lows. Pay attention to the market structure. Pay attention to the market moves, the market structure, and it will tell you everything you need. What's it doing right now? Well, it made a higher high, higher low, higher high, higher low in here. Higher high, higher low, higher high, higher low, higher high, higher low. It's in a bullish pattern, bullish market structure. So let's stay long in our thinking. So if we get a bounce in here off that trend line, if we start getting higher high, higher lows, well then I want to go bullish, okay? And hold runners in case it gets through this zone. But if I take this trend line and swing it out, I'm not doing myself a favor. I'm hurting myself, because if I look to take a long there and even see higher highs, higher lows, guess what's in my way? That trend line I just swung out there. And guess what it's going to blow through? It could blow through that trend line. So again, I will only move that if I see higher highs or lower lows, lower highs. Now, we might see that. This is technically a lower high than this one. And this is or a lower low, and this is technically a lower low than this one. But I want to see this trend line break, because to me that's a pullback to the trend line. This trend line is from this low back here to that low. That is where I drew. You see my points, A, B. Those are my points I drew the line off of. Right now, all it's done is retrace back to that line. I cannot call it a bearish setup yet. If once it breaks through that zone, because that's a 4-hour zone, this is a 4-hour trend line. If it breaks through that and forms a lower low over here at the even the support resistance level, lower low, pulls back to form a lower high, testing the zone, then yes, I'm going to take this 4-hour trend line and swing it out. But for now, no. I have to see, because right now all we could be doing is bouncing off these levels, okay? Then, of course, we draw down to a 60-minute. If you haven't already done so, you're going to have to take your trend lines and go back to the candle highs and lows and actually adjust those, because as you dial down the charts, they'll move. They look like they move, but they really don't. It's just that when you anchor something on the 4-hour time frame, then you go back and dial it down to a 60 and a 15. What happens is during the 4-hour time frame, were you really marked off the high? Probably not. So you have to go back and look at that. If you're looking at a zone and it looks like, if you dial your zone down to a 5 or 3 or 10, it might look like the zone was drawn way out of here and nowhere because the high's right in front of it. Well, the reason why, again, is because you anchored it to a 4-hour high. Well, that's the high during the 4-hour. It may not have been at the start of the 4 hour or the end. So it might have been in the middle. So that's why it'll look. So right now, still looking. Okay, 1 hour, you say, okay, it just looks like it might be bouncing off that zone. So here we are on the 15-minute time frame, and that's all I need to do for analysis is dial down to a 4 hour, 60 hour, or 4 hour, 60 minute, and 15 minute. So what I want to do is now I need to do a few other things because I want the odds in my favor. What is going to help me know if this is set up? And I need to look to set some alarms. So 2 key levels on Nasdaq here is I would want to come in and take my horizontal ray tool and look to draw off that high, and then come down here and pull one off this low. Well, that low is all the way back through the zone and around the trend line. So if it gets below that and below this level, well, then I'm going to look for that structure to be built up for a short. If it gets up through this high, well, then I'm going to look for it to obviously go up to the top of our zone. And then if it blows through and makes a higher high and goes up through the zone and comes back to test it, well, then we're in long. Now, if you're dialing it down at that point to a 5 or 3, well, then right now on your 5, it's still bullish. Swing up, swing down, swing up, swing down. We're still making higher, high, low. This is where we ended up on Friday. So with market open, we need to look for reasons to get in. I don't like trading for a few hours in the market. 8 to 10 is what I typically like trading. If you take your line, guys, you can actually hold down on your control key, and then you can just grab another one right from where one is placed. So I would want to set up 2 alarms here, and these are not entry alarms by any means. They're just price alarms. So one, I would come down and put a price alarm. You could put it there, you could put it here, but this is to let you know after the opening of the market what's happening. Now I can walk away, I can go to dinner. I would set an alarm on this and set an alarm on this as well, those 2 lines, and you can walk away and see how the market's set up after open. Again, I always like to wait till 8 o'clock. I don't like to trade things as soon as market opens. You're going to get gaps. Those gaps have to typically be filled. I don't trade gap trading on futures. And the other thing is that, remember, Nasdaq and ES move. They'll move. Don't get me wrong. They'll move throughout the night. However, their market is tomorrow at 9:30 Eastern Standard Time. I want to trade with the big boys. I don't want to get in on just a dead stale market. And again, it'll move, but I don't want to be involved with that. I'd rather trade when there's more volume. There's going to be the most volume on Nasdaq, ES, Russell, on those instruments is during the U.S. stock market. Other than that, you're getting into bots trading and a bunch of other stuff, and I'd just rather stay out of that. Again, I'm going to put the odds in my favor. Well, the odds are going to be in my favor because I need volatility. I need movement. If something's not moving, I'm not locking in profit. If I'm not locking in profit for the day, I can't make money at the end of the week, at the end of the month. My goal is to make X amount per month. Well, if I'm not locking that in per week, per day, then I'm not doing, why am I sitting here? Okay? So I need movement, and if I want good movement, it's going to be to trade when the best time of the market is to trade for this instrument, which is 9:30 in the morning, U.S. Eastern time zone. Okay, so that's what I'm going to wait for. I don't even really care where this is going to go. Now, if I kind of want to peek in later, I'll look after an alarm's broke, but it better be a good setup. The only way I would take Nasdaq, ES, Russell, any of those during the night, during an Asian session, is it would have to be 100% setup. If it's not 100% setup, I don't want to mess with it. Okay, so I'll set on alert. I'll peek in and see what it's doing. But if it's not 100% setup for me, I'm not trading it off hours. Okay, so keep that in mind. Just prepare your plan for either a break of these levels, bounces. Like I said, we're already bullish, so look for bullish confirmation, the bullish structure to continue. If it breaks through this line, comes back and bounce, you can get in long. However, if it breaks through here, so if it breaks through the lower, still watch it because we're in a bullish move overall. So you could get in on a bounce if it sets up higher high, higher low, boom, you're in. Do you give up some profit? Sure. Do you give up, some of that potential profit because you're waiting on structure to build? You're waiting on a higher high, higher low? Sure. But I could see this. We know on the higher time frame it's moving up overall. So I could see it retrace back through the zone, hit this trend line, and then bounce. That might be your structure overall. So do you want to get caught up in some losing trades on this? Again, I don't. That's just taking riskier trades. If I do take riskier trades and I get in something like that, well, if you're normally a 10 contract trader, okay, on micro, don't get in with 10 as it's pulling back. Okay, get in light, get in with 2, get in with 4, get in with 1, if that's what, it's a riskier trade. So take that into consideration because you're actually trading a pullback overall. What you're trading is, if it goes down and you're in short, you're actually trading a pullback, okay, to a line. So I don't want to trade that because overall we're in a bullish move, okay? And it looks like I need to reattach some lines because as I'm down on the smaller time frame, it's moved pretty close. There it is. So again, that is we're on this line is from a 60-minute time frame. So if it pulls back to that, it is just a retracement till it breaks that. So if you do get in and trade that short, make sure to go in light. Don't go in heavy, okay? The better play would be as if it comes into the bottom of the zone, tests this trend line, 60-minute trend line, starts rounding over, you see higher high, higher low, then get in long. That would be when I would go in a little heavier. All right, I hope you enjoyed the video. I will catch you on the next one.